Hi class, in this video we'll be going over closing journal entries. So I have an Excel worksheet on the screen, and this is just an example problem that I grabbed from my accounting lab. It actually corresponds to PF4-41, so this can be located in my accounting lab under the study plan. This is the problem in the format of an Excel worksheet, so that's why it will look a little differently just for presentation purposes. But I have the accounting worksheet on the screen, and you see the headings. We've got a trial balance, adjustments, which were Chapter 3, an adjusted trial balance, and then you have the income statement and the balance sheet columns. So all of these accounts listed over here are all the accounts that the company uses that currently has an ending balance. So at December 31, or at the end of the accounting year, we need to close out the temporary accounts. So all the way from cash all the way down to retained earnings, those are called permanent accounts. Okay? So what we're closing out is everything from dividends down. So I'm going to add a thick bottom border. Actually, hang on. I want to do a top border. So that way I include dividends. Let me see. Okay, so you can see now every account under retained earnings, these are your temporary accounts. All revenues, all expenses, and dividends. Those are all temporary. So when the accounting period ends, we want to start the new period with zero balances. And the only way to do that is to close those accounts so they do have a zero balance. And that money will eventually make its way to retained earnings, this account here. Okay? So I'm going to walk you through step by step. All of these above that line, those are permanent. Those accounts, those ending balances, we don't want to necessarily close because those balances are going to constantly go up and down, up and down, up and down, just like your cash, your checking account. At December 31st, every year, you don't close that account and open up a new one. No, that balance keeps going up and down as you make deposits and as you make payments. That's the same with all of these accounts, okay? All the way down to retained earnings. It's these, again, these are your temporary accounts that we need to close to start the new period. So what I have over here, this is, I'm going to do my journal entries over here. So I've got my worksheet displayed, and I've got my journal entry paper, the general journal over here on my right side of the screen. All right, so let's go in order of our steps. Remember the steps. Step 1 is to close all revenues to income summary. And we're going with the calendar year, so my date is 12/31, and I only have one revenue account, okay? And my ending balance for that revenue account is, if you're given the problem in this format, you're looking at the adjusted trial balance because that's the accurate ending balance after adjustments have been made. Okay, it depends on how the problem presents itself. They could give you T accounts, and in that case, you're looking at the ending balance for that account. So service revenue has an ending balance of $50,700. Oops. So I'm going to come over here to my worksheet. Okay, and I am going to close out service revenue. To close it, I'm going to do the opposite of its normal balance. So ask yourself, what's the normal balance of any revenue account? It's a credit. When it goes up, we credit that account. So now we want it to go down, right? Because we want it to zero. So we're going to do the opposite. We debit. Okay, so service revenue, debit, 50,700. Okay, and my credit now is income summary. That's step one. Close all revenues to income summary. Okay, that is step one. If you've got more than one revenue, then you're just going to list them all here. They'll all be debits. Okay, so that is to close the revenue account to the income summary account. So the next step, we're going to close all of our expenses to income summary. So these are all of our expenses here. Okay, and notice the normal balance of any expense, right, is a debit. When an expense goes up, we debit that expense. So if we're closing those, we're going to do the opposite. So for this one, our debit will be income summary. Let me skip a line. Okay, and I'm going to leave that blank right now because that's going to be a sum of all my expenses. Okay, so again, expenses are displayed right here, and we're looking at under the adjusted trial balance because that's the most accurate up-to-date balances. So we're going to use these numbers. Okay, so our first expense is going to be rent expense. We want that balance to 0, so we're going to credit it. We do the opposite. That is $4,000. My next expense is salaries. For $26,400. Remember, I'm looking under the adjusted balance numbers. Supplies expense for $325. And utilities expense, $300. Depreciation. This one's on the building, $400. Depreciation expense on the furniture, I'm just going to abbreviate. That's $300. And last, interest expense, and that is $250. So now I need a sum. I need to sum up all these numbers. So you can use a calculator. I'm just going to take a total of all of my expenses, starting from rent all the way to interest. And the total, my total debit should be $31,975. That's all of these numbers added together. So I have my 4,000, 26,400, 325, 300, 400, 300, and 250. Okay? So that was step 2, closing all the expenses to income summary. So now our third step is to close the income summary account because now that account has a balance. Okay, so we can put up, I'm going to show you. I'm going to put up an income summary T account. Okay. You make it pretty. Margin center. Okay. When we close, now I'm just going to post. Okay. I'm going to post just to the income summary account. We had a credit of $50,700. That is when we closed revenue. That was closing number 1. when we closed out our expenses, income summary was debited for $31,975, the total of all the expenses. Let's put closing number 2. So now we can find the ending balance. Okay, bottom border, balance on 12/31. So my revenues minus my expenses, and that equals $18,725. And that should be the number for net income. If you were to prepare an income statement, that would be this number here. So notice it has a credit balance, and our step 3 in the closing process is to close that account, to close income summary to retained earnings. So that's what we're going to do in this next step, okay? So our debit would be income summary for that total net income amount, $725, and our credit would be retained earnings, $18,725. Okay, let me make this bigger, my text box. Okay, so that was this journal entry here. So this one goes with that first journal entry, close revenue account to income summary. This is an explanation of my second journal entry. This is closing entry number 3. Now I'm ready to do closing entry number 4, and that is closing dividends directly to retained earnings. So dividends has a balance of $1,500. And remember, dividends is like an expense and an asset. When we increase those accounts, we debit those accounts. That's the normal balance. So to close out dividends, we would do the opposite, right? Oops. So let me go back. So retained earnings is our debit. And that should make sense because retained earnings is going down. Dividends reduces the amount of money that a company can retain. And how do you show a decrease in retained earnings? By a debit. Okay, 1,500. And the credit is dividends because we're doing the opposite. We're closing it out. Okay, so those are the closing process steps. And this is just an illustration again of how you would take the accounting worksheet and do the closing journal entries, if it was presented to you this way in a problem. All right, now let's see. I hope this helps. Let me know if you have questions. But this will end the video on, just the closing process and the steps. This is step number 1, close revenue account to the income summary. The journal entry is above the explanation. Step 2, close expense account to income summary. The journal entry is above that explanation. To close the income summary to retain earnings, again, the journal entry is above that explanation. And to close dividends directly to retained earnings, that journal entry is directly above that explanation. Okay, I hope this helps.